Hello, investors. Welcome to another 180 Markets Raise Day Zoom. Friends, gold is the ultimate storage of value, and it doesn't matter whether it's here in Australia, the United States, Europe, or Cuba. That's right, Cuban gold. And what's so exciting is that Cuba has been extremely undersupplied over the years. And not only that, hasn't really had mining modern techniques as it does now. And with us today, we have Brian Johnson from Antilles Gold. And Brian's going to talk all about the company, its prospects, the high grade potential of this project. And that is what makes it so exciting. And with that introduction, Brian, welcome to 180 Markets.
Thank you, Greg.
Hey, Brian, everybody's got a story and everybody invests in people as much as projects. Can you just tell us a little bit about yourself?
Certainly. I'm a civil engineer by background. I'm not a mining engineer. So if I have any skills at all, I suspect it's in project management and putting projects together, the jigsaw puzzle. My background in the mining industry started in the 1980s. I was a partner of Lang Hancock in Western Australia, and we jointly developed the McCamey's Monster iron ore deposit. It was his at the time, and I developed that under an option arrangement with him. We ultimately sold it to BHP. I developed the Woody manganese mines in Western Australia in a partnership with Lang also. That mine was ultimately sold to a Ukrainian investor for in excess of $1 billion US. It's a very successful mine. I've floated quite a few companies in the resources sector over the last 20, 30 years. Austral Coal is one, which is quite successful, finished up with Glencore, now with the Indian owners. Mount Gibson Iron, I floated, started, sold to Chinese. Portman Mining started, ultimately sold to Cleveland Cliffs from the US. So I've got a fairly long background in putting together projects, fundamentally from my own concept, my own ideas. I put my own money to them, bring them along, sometimes take them to the market, sometimes do them privately. But I've done quite a few over the period I've been in the business.
Yeah, Brian, and that's certainly one of the reasons that makes Antilles so attractive is your long track record and your history of success. Now, maybe turning towards Cuba and Cuban gold, can you just give investors a little bit of an overview of the area and also just what makes it so exciting from a mineralization perspective?
Why I went to Cuba in 2015 because a geologist friend of mine, probably in a bar, I suspect, reminded me of just how many copper and gold projects existed in Cuba and had been explored primarily by Canadian mining companies in the 1980s and 1990s. But really from the late 1990s, no one other than Trafigura have gone there to develop a modern mine. Now, I use Trafigura here because it's a good example of the opening up. Trafigura invested over 300 million US in the Castellanos base metals mine in Cuba. It was commissioned in 2018. Been to the mine, it's a beautiful mine operating smoothly. Trafigura are very proud of the fact they could bring it on budget and on time and found developing that mine with the same partner that we have, Minera, which is a government mining company. It was a very smooth operation and still is. So I went there in 2015. I took a geologist with me, left him there for a year. He looked around at a whole range of prospects. 4 of them are now with us that we looked at in 2015. And our primary project at the moment, this La Demahagua project, is the largest known gold deposit in Cuba. It was explored many years ago, early 1900s, I think. Many people have had a go at developing it. I think the time is right now because of gold price and other things. And the other 3 properties we looked at the time, we now also have in the portfolio sulfide gold deposits.
Yeah, and can you also discuss, what's nice and what we liked is that there is, as you said, some case precedent also for successful exploration, successful programming over there. How do you structure a deal in Cuba right now? Because it has changed.
It has. Firstly, I have to say this, that the foreign investment law that came in 2014 is a very acceptable document for the fiscal regime and the rules by which you can operate. They also have, I might add, excellent environmental laws and mining law, so that you're going in, providing the rules don't change, I must say, into a situation where it's reasonably predictable. Now, as to how you get into the industry there's two phases. One is the equivalent of an exploration license, and the more important one is a joint venture, which is a development joint venture. And we're the only company, foreign company other than Trafigura that I know of, and I'm sure this is correct, that has a joint venture to develop a mine. There are a number of companies, and it's increasing in activity, Chinese and Canadian, who are coming into exploration plays. They are fairly long-winded exercises. It could take you, in my view, from the day you walk through the door of Germanera to the time you negotiated your agreement and then you got government approval for it, you're talking about 18 months. Then you've got to go through 3 to 5 years of exploration before you fall into a joint venture. So we've been pretty lucky in we have a walk-up start in going straight into a joint venture. And that's primarily because this particular property at La Demahagua has had 50,000 metres of previous drilling on it. So there was, other than sort of confirmation drilling that we're doing at the moment, because that drilling, though done by Canadians, wasn't done to JORC standards. So we're having to go back over that 50,000 metres with a 25,000 metre program of our own. But basically, you've got two steps in this exercise, and what we now have is the joint venture for the first project. We have an exploration license for another 3 sulfide gold deposits. But if after preliminary exploration by us, and they have development potential, which we firmly believe they do, they will fall into the joint venture, the operating joint venture, and then ultimately, hopefully, be developed. So that's basically the process.
Yeah, and what I really think is great is that we're effectively fast forwarding that 3 to 5 year program, as you discussed today.
Absolutely.
And that is, and that is what we're buying into. And then maybe specifically, can we just discuss a little bit more about La Demahagua and what makes it so interesting? Because it really has, as you said, you're doing a big drilling program there. What is it, 14,000 meters? And
we're doing 25,000. We've just completed the first 15,000.
Okay.
And the last 10 started, in fact, it starts tomorrow, as a matter of fact. Okay. And that'll take about 3 months.
Right. Well, that's certainly in the near term, and it's certainly a lot better than 5 years. We're going to find out answers very, very quickly. But can you just describe a little bit more about the project and what you're hoping to find there?
Certainly. What we're doing is we're well and truly on the way with a definitive feasibility for this project. What we do have at the moment is a very detailed financial model that was based on historical drilling, the 50,000 metres I talked about, plus a lot of quite extensive metallurgical test work that was done by SGS Blakefield out of Toronto. All of this was done in the 1990s primarily, and some 1980s. We have the benefit of that. Our financial model was based on geological modelling of that data and firm quotations from primarily Chinese suppliers of mining equipment, crushing plant, milling plant, flotation circuit, and an 8 megawatt power station. So we were able to put a financial model together, which I'm very confident that the DFS will replicate. And that financial model has to assume certain grades and so forth, but the reality is it's based on 50,000 metres of drilling done by professionals. It wasn't, they weren't to JORC standards, otherwise we wouldn't be drilling. So we have a resource, but it's non-JORC. And ASX, of course, won't let us, not permitted to talk resources in any shape or form until we have JORC indicated resources. We'll have initial resources probably early next year, and then final resources about mid next year.
Right.
Which now, you asked what we're expecting out of the mine. The mine plan for our financial model is based on that data, but we're assuming an 800,000 tonne per year mining operation, which is quite small. Stripping ratio looks like it'll be about 7 to 1. We should produce from that based on past metallurgical test work, and this will be confirmed by the work that's going on in Canada now. But that should produce about 60,000 ounces, 60,000 tonne of concentrate per year. Mine life is 6 years initially, then underground for 10. But with that 60,000 tonne of concentrate, if we get the same levels of grade of gold and silver that past work has done, we'll finish up with about 100,000 ounces of gold equivalent per year production. That goes for 6 years. The underground, we will probably drop the mining rate to about 550,000 tonne per year rather than 800,000. And that will give us about a 70,000 ounce per year operation through for another 10 years at least.
Yeah, and I think that in our minds, the best way to say it, there is a huge upside potential, especially given, I know, and we'll get back to it, we cannot discuss JORC, we cannot make our estimates, but what we can say definitively is when we look at your market capitalization compared to the potential, there is multiples of expansion.
Of course, we've done with our Cuban partners effectively a 10-year plan that actually takes part of the expected surplus cash that's generated from the first mine, just for the first 6 years, and reinvest that in 2 or 3 other projects. And if you string about 4 of these projects that are in hand together, the earnings potential keeps going up and up and up progressively. And the cash in hand, other than that's distributed, gets to be quite a significant number. So our modus operandi is really to get this first project going as quickly as we can, get the cash flow moving, and to reinvest in our second project, which is a couple of smaller mines, but they'll produce 50,000 ounces of gold, we think, as well per year for some period. And then there's a third one, and there's a fourth one. So right. That's how I think we can grow this company in Cuba fundamentally without us being called on for a lot more equity than in the first project. I think that what we have to contribute to La Demahagua, plus probably 5 or 6 million of exploration, which is at our risk, that's probably the limit of what we'll ever see going into Cuba. But it generates some serious profit for us and dividends and so forth going forward, all being well, of course.
Yes, absolutely. And also your other projects within there, when we look at, Florencia, Maclama, and Golden Hills, would you say that they represent like upside optionality in your mind?
Absolutely. The Florencia property in particular has had I can't remember the number, but I think there's over 250 drill holes into it. It's got a shaft that was sunk to get bulk samples of ore down 80 meters, 1,200 meters of lateral drifts, and I think 900 tonne went to Canada for metallurgical test work. They finished up with a concentrate grade of 120 grams per tonne, whereas we're only expecting 47 grams per tonne out of La Demahagua. So it's a very low arsenic content, 0.05%. So that's a pretty interesting target. Maclama is about the same size. They're 7 kilometres apart. And I can imagine that we would do 2 pits there, 1 on each, and a centralised concentrator. And that will produce more concentrate for sale.
Right. And again, all of these grades for investors, they represent high grades, which certainly makes for, more efficiency and a cheaper mining cost. Isn't that correct, Brian?
That's true. And I might just mention, seeing that you did, this Golden Hills property is a very large VMS deposit, which was explored, not extensively, but explored by McDonald Mines in the 1990s from Canada. They drilled mineralization for about a 1.5 kilometre length by I think it was 1 kilometre width, within a lens that's over 7 kilometres long and 2 kilometres true width. The consultant geologist, who's Canadian, based in Vancouver, that we've now re-engaged, who was there active for McDonald Mines in the 1990s, claims this deposit to be seriously large and will produce quite large quantities of copper gold concentrates. That's probably a project that might even be too big for us. But by the time we get to that one, which is project number 3 or 4, we may look to bring in a joint venture partner with bigger bank balance than ours. But it's a very interesting project. Now, our own exploration manager is extremely enthusiastic about Golden Hills.
Yeah. Hey, Brian, you have so many, ways to go. What should investors and what would your idea of success be, say, over the next 12 months?
Success in relation to share price?
No, in relation, if you hit the milestones, your share price should take care of itself.
Okay, good. I'm glad you didn't ask me that. Over the next 12 months, well, I'll go a little bit shorter than that. By mid next year, we will have finished the DFS. We will have completed the JORC indicated resources. We will have upgraded the, obviously, the financial model as part of that DFS. We may or may not have offtake agreements for the concentrate by that stage because it's a fairly long-winded process, though I must say the samples we'll get out of SGS by the end of this year will go straight to the prospective buyers. So we'll start the dialogue early next year on offtake. If I'm going to put a negative on this, I have to be pragmatic about things. The biggest hurdle we face is not the ore body or the economics of the project or our partnership or the rules or regs, but it's funding the project. Now, we have a total capital cost of 73 million, including about 4 million of interest during construction. We're going to contribute 13 million of that. That's all we contribute to this large Demahagua open pit mine. 7 million of it is spent on the DFS and overheads of the joint venture company through to the end of next year. And 6 million we don't spend until construction starts. And that's on mine infrastructure like offices and warehouses, workshops and so on. So we have a challenge of raising $60 to $63 million. I'll ask myself the question, then I'll answer it. Where's it going to come from? We are in discussions with China Exim Bank to support supplier credit, probably for about $25 million, which is about 70% of the equipment, not so much equipment, but the big plant items that we're going to buy from China. And I'm in discussions with two banks that I obviously can't name, who both expressed some interest in providing project finance and who are not affected by US sanctions. So I'm reasonably comfortable we'll put it together. We do have a fallback, I suppose, and that is you go to the market with some convertible notes or equity raising, but that's not what I want to do. So our preferred position is traditional financing. That will start to happen in seriousness early next year. We need the concentrate samples. We need the upgrading the design of the flotation plant. We need to rerun our financials. Then I'll get out into the marketplace with the banking crew. But we're talking to a couple already, so I'm fairly confident it will happen.
Yeah, and Brian, judging by your track record as we started the interview with, you certainly have a very, very credible record of bringing projects online, making them incredibly profitable, and we very much look forward to sharing this journey with you. Hey, Brian, do you have any closing remarks for the audience?
No, I think that we are certainly underdone as a company. If we achieve what we expect to achieve and genuinely expect to achieve, there'll be nothing but step-by-step solid growth in value. I'm not sure that we'll ever be spectacular. If our drill results that we're about to announce were in Australia, you'd see a market capitalisation many, many times more than ours. But watch this space is all I can say, because we're really getting good results and even better to come.
Thank you, Brian. I can see your enthusiasm and we'll definitely be in touch.
Thank you very much. Thanks, Greg.
Bye-bye.